Okay, let's go ahead and get into the stock market technical analysis. We're going to look at where the charts are today. I haven't put out a video for a few days, so we'll get right into it. Drop me a thumbs up if you're interested in the private member group. I'll be back on the private member posts more frequently now that I'm back. So, link in the description below on that one. Triple Qs. Okay, the biggest thing that we're looking at here is, here's your island cluster top right there. So we gapped up and then we gapped down, creating that island cluster top. That will remain a top until you get a daily close above that high right there. You can see over the last few days, they've run up and they're testing the highs right up in here for basically the last today and yesterday. But we haven't had that daily close above those highs. Even today, you can see they've kind of popped it intraday, and yet the sellers are stepping in. So that's it. I mean, it's very simple. A daily close above that level, and that level right now, it's about 515.30. Maybe there's a little wick, could be up to 515.70. I just give it about 516-ish. Call that kind of the top. Daily close above there, not just by like 10 cents or something like that. They could try to pop it by a few cents, but in general, you'd want to see, 0.5% or so above that level, that 516-ish. If you get a daily close above there, then it's, technically we haven't hit the top, and we could continue to go higher. Otherwise, this is just a back test. So as of right now, I'm treating this as the top because that is the pattern, that island cluster top. And then we are back testing that key resistance level, and that is an objective short right there. So the two objective shorts that we've had recently, and there will be a third as we start to break support levels, but here's the objective shorts. It's objective to short when you see a topping pattern, which is this island cluster top. So it's objective to short on the gap down. All right, you short the gap down and you set a stop on a daily close above the top. So that's your risk, right? So if you shorted that, you're looking at a potential, about a 3% loss, all right, your risk. And then the pattern for the top, we do have this bearish rising wedge. Now, we did obviously break out to the upside on the Trump pump, but the pattern still stands. It hasn't really been negated. So ultimately, take the widest part of the wedge, which I've got right about there at the point of the breakdown. And again, it sends us down to the 200-day moving average down here, somewhere around 465 or so. That would be the measured target. So we've got about a 3% loss potential to stop out. And then the gain, really, if you shorted the breakdown there, you've got about an 8% potential gain. So better than a 2-to-1 risk-reward ratio, almost a 3-to-1. So very favorable trading odds. So that's it. Stop out on daily close above. Otherwise, objective to short on the breakdown, and it's also objective to short here on this back test. Those are the two objective shorts on this trade setup. And if it plays out, depending on where you took your short at, maybe you get a blended return of 9 to 10, maybe 9% or so, kind of a blended return. All right. And that's all I see on triple Qs as of right now. Recently, I can see Meta has been rallying. I think it's because there's Zuckerberg met with Trump. This is still kind of the Trump pump going on. And what I really have, though, technically is you've got here's your lows going back to November of 2022. There's support where we've hit that trend line a couple times, hit it again there. We then broke, I think definitively we kind of broke right in here, but you did a slight little break right there. Again, this was a break right ahead of the election, so kind of a little false breakdown. But it has definitively broke down from that pattern now, especially right in here. And this is merely a back test. That's what we got going on. It is a back test of that resistance level. They're just pumping it into that resistance level. If it turns around and starts to sell off soon, we're going to just be extending the negative divergence. Momentum, you can see here, is clearly pointed up. But if we start to roll over, it's just going to be a new divergent high where prices make a slightly higher high. This is what we see a lot of, where we basically, it's kind of topping pricing action, where you basically sell off a little bit and then run up and make a slightly higher high and then sell off right after that divergence. So this area right here, it's not completely objective to short because we haven't quite hit the trend line. You could go up a little bit more up to that trend line, which is probably a few more percentage points. Let me measure that out just to mark it out. From right where we're at right now, yeah, it's about 1% up, maybe 1.5%, maybe 2%, depending if they backtest for a few days to the upside. And then the downside is the widest part of this wedge, which is a large wedge. I've got it basically right here. You take it at the point of the breakdown, which really was back here on the back in mid-November was the breakdown, and that sets you up for a major target somewhere down around, you've got this gap fill here, but again, the major target's actually slightly lower, so we'll see. So again, risk reward, it's actually pretty favorable of a short trade right here. You can, your loss potential, maybe 1 to 2%. Again, that would just be a backtest. So you'd have to give it a little more because it'd have to recover the trend line definitively. So really to stop out, you'd want to see probably about a 3%, a 3% rally from current levels. You'd recover that trend line, and that you could stop out there. That would maybe make sense. Otherwise, so that's your loss potential, 3%. And if it does sell off and hit that major target from right now, that's potentially even down to this gap fill, 33%, and potentially lower down to 40%. So a 3% loss for a 33 to 40% gain, very favorable risk reward ratio. No guarantees it plays out, but this is what the technicals are saying right now. This is the pattern. So until that technical pattern changes, it's a favorable short trade with a really good risk reward ratio. Nvidia, this is the big one. Again, still holding trendline support, so there's no big sell signals quite yet. This is coming off of October of 2022. We've got an uptrend line to really watch. There's another reaction. There's another one. And recently we hit another one. So there's no break of support. We are still holding the bullish trend. And that's it. Until you see a break of that trend line, we don't have a sell signal. But we do have pretty big negative divergence. It's been building for a while. So each new high that this is making, it has not been able to take out the divergence. It's making a new high and then getting sold into. So this divergence building is telling me that this long uptrend is coming close to an end. All right. And we'll know definitively that we'll have another check mark that the trend has ended when we break the trend line. Okay. And when we do break, then that will tell us, okay, it's a higher probability that uptrend has ended, and we're now going to see a trend to the downside. But again, no sell signal quite yet, just divergence. We could continue to diverge. There could be another divergent high. That nothing negates that at this point. Okay, Tesla. Tesla's technical setup is right here. You've got let me kind of zoom in to grab it. There it is, bearish engulfing. All right, outside day. So that's a top. That's a topping stick. You mark the high of that as the top until taken out, until you have a daily close above, which we have not had. So that marks the high. And ultimately, we should head lower. All right, I am anticipating. I'm really looking for us. Tesla did break out of its downtrend. So here's the downtrend. You can see reactions there on the daily chart. There's another one. There's another one. Really, that's another one. But ultimately, this gap up right here was a breakout. So for sure, it has broken out. I think we come in and back test that. All right, that's what I'd be looking at. Support at 312.75, and then some support here at 370, about 376.25, and then that downtrend line and the gap fill would probably be. That's where the bulls would likely be waiting. All right, so I see the downside on Tesla as of right now, probably a total of 27% or so to backfill that gap and hit that major downtrend line support that's been put in. So yeah, that's the trade right now. I think that looks pretty favorable as a back test of that breakout. And you know, if you're shorting, it doesn't make sense to really, if you come into this support level, it makes sense to cover that short and then wait for, you know, you could even go long for a bounce because that would be an objective long down there. Apple's putting in a new high. It is a divergent high, but it's not confirmed quite yet. So you can see here the momentum is moving up. We are making a lower high than the former high in momentum. So there's your price. There's a new high in price. Here's your former high in momentum. And here's a lower high in momentum, although it is pointed up. So if this continues higher, it will burn through that divergence. So really, this has some work to do, all right? There's really no short here. What you want to see is first a confirmation of divergence. So you want to see the RSI start to turn down. You want to see the PPO start to turn down and cross over to help confirm the divergence. And then ultimately, we're going to look for some sort of a trend line break. And I've got a trend line right there. I got to mark that out. So break of trend would be the sell signal. So that one's got some work to do. And Microsoft, you know, I adjusted the wedge slightly, but ultimately you've got this high, you've got this reaction high, you've got a third one. It still looks like it's kind of wedging. I could probably, and I really should probably adjust this wedge down here to there, just give it the benefit of the doubt. So there's my wedge. Still looks like it's wedging. Isometrical triangle. Momentum, there's no clue here in terms of momentum. Momentum is also compressing. So it's, you know, we need to see which way this breaks, and there's really no clue. It's kind of a 50-50 in terms. So depending on which way this breaks, you know, that will be a clue on where the market breaks as well. Okay, really quick sector analysis. Obviously, IWM, small caps, resistance right there. Boom. You can see we've had several reactions. Just recently hit it, so we should come down. We do have negative divergence. No real, you know, you can short at resistance or a break of support, which is this trend line right there on the daily. XHB, our home builders, popping up, putting in a new divergent high right there, but still divergence and, you know, selling off selling off over the last few days. Could be bull flagging. That's possible. I don't see a whole lot. I mean, this one for me, I never had this trade, but the PHM trade was a trade that we did, and that one hit its measured target. So yeah, this was the widest part of the wedge there, and the measured target was basically there. Take that at the point of the breakdown, which there's your measured target. It's about 122.04, and you can see we hit that you know right there on the 20 or on the October 29th. So no real trade on the home builders right now. Energy, not a lot. I don't see a whole lot in energy really. It still looks relatively bullish, but it's kind of flat. I mean, it is trending higher over the long term. I don't see any real swing trades there. Financials, not a lot in the financials either, at least as a sector. I do see some short trades in individual financials. FITB is definitely one of them. There it is. This one again had a Trump pump, rallied it up, hit resistance, and you can see I've got that kind of marked out on the wedge. Resistance, 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 and they're selling into it. Support just down below. And we need to see this break support. All right, it has big negative divergence, so it tells me it's going to. And then I've got the measured target either down here, and I like this one at 31.84, which would take it at the point of that breakdown right ahead of the election pump. That would be the move. Could potentially also only break down to about 34.33, you know. So again, those are kind of targets. Once we break this support line there, we need to see that go. And this is MasterCard. Again, there's your bearish rising wedge. We had a big topping stick right here. They did take that out, though, for sure. So that's not the top, obviously. We have another topping stick going on today with the bearish engulfing. So, again, you just kind of... as you get these topping sticks, if you short them, you just stop out on daily closes above, and otherwise, you know, it can mark the high. And what's this? I got this little indicator. Let me get rid of that one. And then you can mark the high, and if it takes it out, you stop out. Otherwise, you're marking the high for a move down. This one, again, just recently put in another divergent high. So that's all that we have going on in the kind of the post-election or post-election results rally is just a new divergent high. You can see momentum continuing to drop off. So I'm expecting us to have a sizable pullback once we get some initial sell signals. Industrials, again, you know, here's your post-election pump, hit resistance. I don't know why they marked that, you know, they just marked that as resistance, sold off, rallied again, resistance, selling off. So resistance on the industrials right about 143.75. And then support I've got marked as this trend line here. Okay, so down there. Till you break support, no sell signals, although you can short at resistance. XLV rallying into resistance. So this one, we had some support right about 146.50. You know, you could move it up a little bit, but basically right there. They've slightly recovered that, but again, it's pretty muted. So this looks like stop rate action, and I am expecting this to continue lower. This has been trending down. All right, you've got a lower high, lower high, lower high. I'm expecting that to be a lower high, and we're going to continue to trend lower. And you'll see here on the momentum, the recent low that we made right down here was a lower low in momentum. So there's no divergence. There's no longer term bullish divergence telling me that this downtrend is over. In fact, I think this is merely a bear market rally in the healthcare sector, XLV. It is just a bear market rally, and it makes sense. I mean, you can see, look at this rally. It's just gone straight up. All right, it's gone up 5%, just pretty much straight up. That looks like bear rallies. So I'm expecting XLV to go lower. We'll continue to kind of keep an eye on that one. XLY, consumer discretionary. I don't see much here. You know, momentum still looks okay. You've got, you know, bullish momentum, bullish price action. So that one doesn't look horrible. Real estate or retail, this one continues to look okay as well. So again, you're gonna want to watch Visa and MasterCard. That'll give you a clue on that. Utilities doesn't really matter. XLP, consumer staples. Again, this one, look, you've got support. Lots of reactions there on that support. You broke support, and we've rallied into resistance as a back test. They might pop it up and put in a new divergent high just over that former high there. That's, you know, we're so close, it would make sense that they're going to kind of grind this, back test it for a little while and put in a new divergent high. But in general, this is a zone of resistance, and I would expect us to ultimately get sold into and then back down to the support and then take out that support. All right, probably get a little bounce and then take it out. So what I'd look for on that one is some sort of a rejection candle, because we are back testing. We could go a little higher. Look for some sort of a rejection candle, an outside day or a doji or reversal, something that tells us this back test is done, and then we're going to head lower. Okay, I'll just go through a handful of shorts and I'll wrap up. GE, big bearish rising wedge here. All right, that's been broken. We've taken that out. We have negative divergence. Really broke the wedge right there. Back tested. Haven't back tested yet. Again, maybe we do. Again, we need to take out support, which I've got right about here at 175.30. Take that out. Should head lower. And I'm expecting the major target for this one is down here at about 173, or probably get down to 133 because we have a reaction low right there. And I think that's a former high. Yeah, if I go back, that's kind of a former high. So for me, that's the target on GE. I like it down there. Still looks good. Let me find some other, some long trades. MOS, again, still looks like a long-term good long to me. These are the stocks that I want to go long on. MOS. So this one, you've got sizable bullish divergence that's been building for a while. So you can see, look at that momentum. Each low is a higher low, and it's the same on the PPO. And price is a lower low. You have a big bullish falling wedge coming off of the high here. We've been compressing. So again, we're just compressing. Recently hit the top of the wedge. They sold into it, got close to the bottom. They bought it, getting close to the top. So, maybe they sell into it again. The wedge, we haven't broken out yet, so need to see a breakout of the wedge. And then once we get that breakout, well, I'm expecting we get it because of the bullish divergence and the bullish falling wedge pattern, then the widest part of the wedge sends us all the way up to about 45-ish, somewhere right there. So depending on, of course, when we break out. Let's say we have to just keep moving this major target line right there because, again, that's the widest part of the wedge. All right, so you move it down, and you basically got it there. There's your widest part of the wedge. Take it at the point of the breakout, which has not happened yet. So this just keeps moving. NTR also still looks good. I mean, it's gotten a little choppy, but there's still bullish divergence. That still remains. Big bullish divergence. These divergent lows are getting bought. That's where the buyers are at. You can see divergent low, buy. Divergent low, buy. Haven't made a new divergent low recently, so we'll see. Resistance on this one, let me kind of reset the chart, is right now I've got it marked on this blue line as the next level of resistance. There's a little resistance right here where we're at, and then this overhead downtrend line is resistance as well. So a little more work to do on that one. I think if I go to the weekly chart, it's a little more clear on this one. Yeah, you can see, and my chart's a little bit of a mess because I've been doing lots of markups. But in general, this blue line, there's the high, there's a reaction, and kind of basically a reaction right in there. So gold, this is your gold miners, GDX. Again, this one I think recently hit some support. If I roll out, if you look at the weekly chart, kind of bigger picture stuff here, but if you look at the weekly, you've got this big isometrical triangle pattern, and this was a breakout this right here. I mean, you broke out, you kind of chopped around, definitively broke out on that weekly chart, ran up, and recently back tested that breakout point. So not a screaming short, let's just put it that way, because ultimately we did break out on the price. However, I don't know if I want to go long, because the breakout you'll see here on the weekly, especially the weekly RSI, was a divergent breakout. It has negative divergence. So it tells me that there's a higher probability this breakout fails. All right. So I don't know if I want to go long. What I'd really be looking for is, do we get a weekly candle where we break back down within this triangle? And if we do, I'd see us head straight to the bottom. All right. And then that would be support. So that's kind of what I'm thinking. One reason, I'll look at some of these stocks like this one, KGC. This was a stock that I pointed out. On this one, on the daily chart, you've got this bearish rising wedge. You've got clear negative divergence. You broke down, and we haven't hit the major target yet, which is down around the 780-ish level. So I see another push down in this stock, and I think it would be, GDX would need to sell off. These things all trade together typically, so if this pushes down, then GDX will likely sell off as well. So yeah, take it for what it's worth. All right, that's really all I've got for this morning's video. So send me, anything you want me to look at. I'll take a look at it. If it's interesting, I can point out in a video or a private member group post. So I'll be posting stuff as I see it. All right, thanks.